Hello everyone, I'm Stan, so we're starting our Tuesday stream. Welcome everyone here at Exness stream. So I'm Stan, senior trading specialist at Exness. So today I will be your host and I will share with you some tips and maybe advices of how to analyze the market. So we will go through the top-down analytical process in order to help you get prepared for the price action this week, to the most important events and publications. And of course, we will dive in and try to grasp some opportunities. Before we get started, so a small disclaimer. So this session is not intended for any financial advices or trading advices. It's for educational purposes only. So by no means it can serve as a trading advice. So always make your own discretion, always make your own decision. So hopefully the sound is okay, the video is okay. So we are getting started in no time. So let's go straight to charts. Alright, so you see the chart of Exness here, so let's dive in. We'll start with understanding the current narratives. Let's quickly go through the benchmarks, very quickly go through the benchmarks in order to understand what's going on. So first of all, what we see here is the American dollar index. So it's moving sideways totally without any moves in any direction, and basically that represents the calm market, if you will, summer markets, so because nothing is actually going on. What else do we have? For example, Euro USD, it's the same, it's the mirror representation of the US dollar index. The gold is moving also pretty much sideways with no developments. That's what we have here. The Bitcoin is standing below the previous peaks, so it's not moving at all. So there was some correction this week, and that's what was happening here. So the summer markets, if you will, so the last 2 weeks to be honest, but the symposium of Fed is starting at the end of this week, so that's considered as the end of the summer and end of the cycle. So alright, in order to get prepared, let's go straight to economic calendar. So the tradingeconomics.com/calendar, which we always use as a reference, as an important reference. All right, so today is Tuesday, so August 19th. As you see here from the calendar, scrolling it down, we've got some housing starts and building permits for the US, for the United States. Not super important indicator. However, it might also add some element in the picture, some puzzle into the picture. It's scheduled at the 1.39, so the forecast is just as the same as previously. So no big surprises here. Alright, so if you trade the American assets, that might be important for you. So again, speeches of Fed members this week. There will be a bunch of them. For example, Bowman's speech. So let's see what he says. So it's not Jay Powell, of course, but it might be important. Scrolling it down to Wednesday. So British pound, UK inflation. So for those trading British pound against any other assets, that might be important. Of course, crude oil statistics on Wednesday. So you got gasoline production, stock change, petroleum status report on Wednesday, and of course the FOMC minutes publication on Wednesday. So these are protocols of interest rate decision, which shows us of how exactly Fed members were voting for certain scenarios. So I would say that's the most important publication within this week. So that might reshape any expectations, which we'll, by the way, watch later what exactly the market is pricing in this week. All right, what else do we have? Thursday, some publication for Europe, a bunch of publications for Eurozone. So again, Philadelphia. Fed cap index, well, not super important, I would say, for traders. And Friday, also mixed statistics, and Jackson Hole Symposium is starting on Saturday. So yeah, that's pretty much what we have here for this week. So hello, Joyce is watching us from Kenya, so our loyal listener. So nice to see you here, Joyce, and other guys also. Hello to everyone. Put us, please, where from are you watching this session? So which city, what are you trading? So it would be nice to know you. By the way, don't keep it just for yourself. So drop a link to your fellow traders and subscribe to Exness channel, by the way. So every Tuesday we hold educational sessions like this. So that might be pretty interesting. All right, so let's start with watching something that can actually move. So as you see, the American dollar index is completely concentrating inside of the range. So let's watch what can be actually visible from the Fed Watch Tool perspective. So what's happening with the interest rates? Okay, so the next Fed's meeting is in September 17th. So as you see, so the scenario of interest rate kept at the same level is slightly increasing. It's 16% versus previous less than 10%. So it's increasing a little bit. So going to historical, we see that it's not substantial. So probably interest rate will still go down one step. But what we see here is the dynamics. So dynamically, this is some small fluctuation. It changes a little bit, driven by the inflation publication, which happened last week. So it was CPI. It was just as anticipated. So no surprises here. US inflation was flat in comparison to NFP publication, which was, by the way, lower than anticipated. The first NFP for July was less than anticipated, so it was 73K versus 115K, so you already know that, but CPI was flat. That's why it's keeping steady. So, all right, other than that, let's watch the performance of yields of government bonds of the United States, Treasury yields, the so-called. That's the second benchmark which we refer to. And it's 4.9%, so rising slightly, not going down. So the American dollar is not under pressure. It's rather being supported. But we don't see the support on the chart, of course. So that's just the behavior of yield. So bond market is diving down. And American dollar is actually slightly supported, but at least it's not moving down. Under such circumstances, what do we see? That's the narrative, or that's the market condition that supports the US dollar. So if you want to go long Euro USD, for example, if you want to go long GBP USD, well, things should change somehow. So, but now there are no big support here. So, for example, if you decide to buy it, it might reverse, but for now, at least for now, so for today, maybe for today, for tomorrow, the narrative is still building in the favor of the American dollar. That's how it works, basically. So, by the way, let's quickly do the analysis, by the way, the technical analysis, the basic technical analysis, which we always have. So let's go to the market structure analysis. Moving average is visible here, for example, 20-day moving average. So the price is locating slightly above. The same goes for 50-day moving average. So you see that the price is concentrating exactly inside of what we call the value area. That's the perfect consolidation. That's the perfect scenario of a market consolidation here after the trend, after the trading activity. So the trading activity was clearly visible. That was the upswing. So that has ended right here. How do I identify the upswing? So that, first of all, that's the consecutive move between the low and the high when the market had no 4 consecutive closes below the previous peak. So we don't calculate this peak. So we can refer this as a trending activity, but the activity previously was downtrending. So I don't think that's enough for building the directional bias to the upside. So currently, I think we would rather have some consolidation than the uptrending activity, because currently the buyer is not very strong here for Euro USD. So if you ask me what I would do in these circumstances, so probably I will skip buying, keeping in mind that we have the support for the US dollar at the beginning of the week. So that's a correction, that's a consolidation. So the Euro USD was not moving since August 7th, 2025. The buyer is not visible. So probably it will need to trigger some buying activity, maybe at some reference point below 20-day moving average, for example, below the static support, which we see here, right? For example, the previous low of August 5th or the previous low of, I don't know, August 11th. So if the price dives deeper into this area, so we might think of buying. So before that, I think that doesn't make any sense of planning any buying now, considering that the US dollar is under, you see that it's supported by rising yields of bonds. That is exactly what I'm referring to when I'm saying that it's supported. And I would be rather waiting Euro USD here at this level than planning to buy immediately. So the same goes, I think, for GBP USD. GBP USD might be a little bit stronger because, you know, this trend is a little bit stronger here. So you see that it was, first of all, it was more aggressive. It was moving with greater aggressiveness here, achieving the peak of August 14th, whereas Euro USD had achieved it only August 7th, right? So before that it was consolidating. But let's do the same market structure analysis. Again, 20-day moving average, so that's the short-term reference. That's the reference of what we call the monthly trend, the 50-day. So the same situation, it goes the same situation. However, it looks stronger, substantially stronger than Euro USD. Just compare two charts here together. That's the range-bound trend since August 7th. That's the uptrend, and the peak was achieved August 14th. But there is a downswing, so we're already in the downswing. So still it's possible to try to capture the first, you know, correctional day, the trending day, so the day which will close to the upside. So we don't know if it will happen today, by the way, but if it will close to the upside, we might think of buying for the next day. For example, like that. All right. So now let's move to gold, because I know you guys, everyone trades gold here. So give me just a quick sec. All right, let's move on. So speaking of gold, you see that it's the same consolidation right here. It's the same consolidation, so we're keeping for the long time. We're keeping for the long time here inside of this consolidation. So again, let's do some quick market structure analysis applying to references. All right, and what we also do not see here, we don't see any evidence of strong buying activity right here in this price area. So, but today is the second day of this possible upswing, So the downswing was moving right from the August 7th, just like with Euro USD. So the possible low would be at August 17th. So yesterday, which was Monday, it was the first day of a potential upswing. So today is the potential second day of this upswing. So yeah, for those of you who believe in gold, so you might refer to current level as a potential long position area. So at least it will be much better than, for example, it was yesterday and the day before yesterday, which was Friday, by the way, because markets were closed on the weekend. All right, so let's quickly try to figure out how exactly we could enter the position here, because we don't want to jump in at the peak of the day. What we want to do is to wait until the pivot point of the day. So probably that's not a good point here. So 2 hours ahead of the US session opening, and market loses volatility, so the pivot happened in the night, and the London opening session low was here. So in order to probably enter the position, so if the position will be possible here at all, so we might wait for a potential shakeout on the US session in order to have the price reverting to 3,300 something, and then we might consider spotting the reversal here. Okay, so that might be our not lower, I think, and not higher. That might be potentially our area. So if it, for example, throws the wing here, So we might consider buying position. Okay, guys. So put down in chat something. All right, South Africa here, Botswana. Nice to see you here, guys. So, all right. So moving on. All right. So if you play everything right, so that might be very good trade location in order to catch the upswing. So for example, the price moving higher, it might potentially achieve the upper band of the Bollinger Bands here. Maybe, I don't know if so, that sounds like the too high level, but for example 3,400, that might absolutely be achieved in the current cycle. So because nothing actually has changed here fundamentally. So from a fundamental analysis perspective, going to futures, for example, the barchart.com, so commitment of traders, we see that nothing has actually changed here, except that volume and open interest may have declined a little bit. So commitment of traders basically moves sideways with no big changes here. So that's a sideways, that's a flat action with also the speculative position. So the long position moving sideways to 2,304,000 contracts. So not a big deal. So let's also go to cmagroup.com and see the daily bulletin maybe and the open interest and volume representation. So let's quickly go here. Okay, gold futures contract specs, that's what we need, so that's the tab we need. Volume and on open interest. You see, that's the summer market. Everything is falling basically, specifically volume since August 8th. So what was it, August 8th? It was CPI publication, the US CPI publication, US inflation. 414,000 contracts, so had dropped to 129,000. So very low volume, so probably the lowest point since July. So the gold is at the lowest point. What does that mean? So basically that means that the daily interest for the gold is very, very low. Open interest, by the way, also diminished, but not substantially, just to 20,000 contracts starting from the 8th. Well, that means that it needs some trigger, it needs some buying activity, it needs some buying wave. At least you see that traders, investors, they lose interest in trading gold as for now, as a potential protection, as a safe haven, whatever it might represent. All right, but don't be deceived by the low volume, because low volume is a cyclically, it's not necessarily the bad sign. It might point to a cyclical low of the interest, and then it might start, getting out of the range. So absolutely, because the uptrend is not over yet here. All right, but it's incredibly difficult to time your trades inside of the range when the volume is low, when there is a lowest point in the 2 months. Speaking of the interest of traders to this asset, so that's why it's probably very, very difficult to find the exact entry point. I'm not even sure that it will give any decent entry point today. So because I've told you that, okay, we can enter on the American session, but who knows if price will go there at all. So that might not happen. All right, so but nevertheless, we may try to find any other opportunities. So with gold, we understand that it's bullish, but the interest to the gold market is at the lowest point since July. Please small the spread always. Love to work with Exness. Okay, so you want a smaller spread? All right, I don't know anything about that, so you can ask the support, but thank you for your input. What do you about contract size? Well, that depends on your risk management, right? So we are not referring to any contract sizes. That depends on your risk management, on the way you manage your risk, manage your capital. So we are not advising anything. We are not recommending anything here. All right. So by the way, precious metals in general, they're keeping in the same position, just like gold. The same stands for silver. The same stands for platinum. Also the same situation. It's palladium. The same stands for platinum. The group of precious metals is also, bottoming in terms of the interest of traders. Well, what I think might be potentially interesting for this week is not precious metals, is not not currencies, but it might be US indices, specifically Dow Jones. Well, I was referring to this opportunity before, a couple of streaming sessions ago, and maybe last week. By the way, last week I've been pointing out that this is a good opportunity to actually spot it here, so that's exactly what happened. So you see that Dow Jones index had grown, and now it might be the same opportunity. So I don't think it's over. I think it's not over yet. So, and here's why. So just let's go quickly to TradingView and build a spread between the technology sector and the industrial sector. That's the spread, which is built by combining two ETFs, prices of two ETFs together. And you see that the spread was located right above the 2 standard deviations line here, which is Bollinger Bands. So that's the 2 standard deviations line. So it's not today, by the way. It was 2 days before, but that situation shows the relative overbought condition of Nasdaq in comparison to S&P 500. For example, US Tech here, it's going sideways. You see that it was not moving for the last couple of weeks, whereas Dow Jones is on the move. So industry stocks, they have been on the rising trend. So I think it's not over yet. So see that it's perfectly leaning into this resistance level here. It was trying to break, so the spike above this level was rejected. The first spike was rejected, but the overall bullish trend persists. So because if you go to the CNN Fear and Greed Index, you would see that the sentiment remains to be bullish. So we are in a greed territory. Scrolling it down, everything is good except breadth. So strength is good, meaning the stocks are all stocks are moving along, so they are in a bullish condition. The momentum is pretty good. Call options ratio is good. Volatility is at the low. Safe haven demand is medium. So everything is good except breadth. What does that mean that breadth is medium or neutral? It's not bullish. That means that, for example, some stocks are rallying, some are not. So that means the divergence between the move of different stocks. For example, AI-driven stocks, technological stocks, they are moving up, whereas industry stocks and dividend stocks are lagging behind. So that's exactly what it means. And that might be used as an opportunity because we might apply the sector rotation in order to find any decent opportunities for this week. That's exactly what we see here. The sector rotation, that's exactly how bullish markets work, right? So whenever anything grows, so they take profit from here and reallocate it to other assets which were undervalued before. So that's why I'm focusing again on Dow Jones here. The trade location might not be perfect, so because the price is standing right above the dynamic support area and right below the previous intermediate term high. So but that might be the momentum type of situation which we might want to capture, So how can we exactly play this situation? You see this short-term consolidation area. I don't know, it might look like triangle or whatever it is, so I don't know. So you name it. But if it breaks, that might represent the decent opportunity to actually jump in with a pretty low risk and a pretty extended probability of the further breakout here. So yeah, so basically that's a no-brainer. That's not a very difficult trade, so that's a momentum trade. Well, don't forget, the momentum trades are not they don't have very good statistics, so almost 35% or 40% of trades work, but if they do break, so the probability or the move itself, the upside move, may be pretty decent. So that would be my plan for Dow Jones for today, maybe, to capture the breakout on the American session, probably. Of course, not now, because most of the volume for stocks will jump in on the American session. They will enter on the American session, all right? So that would be my agenda for Dow Jones. I will not touch Nasdaq or S&P 500 just yet before the rotation ends, before the rotation finishes. So you see, that's the trend. The trend is not stopping quickly. So that would be my take on that. So that would be my trade for the week. Because I honestly don't see anything really interesting for gold. I don't see any really interesting for currencies. So that's why I'm focusing on that rather than on global markets. All right, so however, we are not just trading against the US dollar. So we have Japanese yen, which is also pushed down. For example, specifically GBP JPY. So it looks stronger than GBP USD because yen was under pressure, and the previous bottom was at August 5th for GBP JPY, just standing in the, I would say, the no man's land between two important levels. The one is, again, the combination of 20, well, I guess that's 20-day moving average and 50-day moving average too, right? So that's exactly here. So it is below. The peak was achieved. The new peak was achieved at August 13th, also not so long ago. So that might also represent the buying activity, but overall currency markets are now on hold here. So you got to be careful about that, because the amount of false breakouts, the amount of failed trades might be increased right now with this summer activity, when the volume and open interest is actually diminishing across the board. So that's one thing. Another thing is that you see that it's in a consolidation area, so you need to be very careful in capturing trades here. Maybe it might be the bottom of the range, something like that. But I would rather not be focusing on the momentum trade here. Momentum trade probably would be risky. So, for example, on the 30-minute chart, if you place Bollinger Bands, the 20-day, 20 parameter here. So, if the price comes closer, you may build the protective area using volatility. So, for example, how do we capture volatility here? We build the average true range indicator. We take the peak of this indicator, which is around 35-40 pips, so let it be 40 pips, and we build this 40 pips area just below the Bollinger, which starts at 199.32, so 198.90 is the end of the zone, something like that. Well, it's pretty narrow, by the way, but I would extend it maybe twice. Well, not twice, but let's put here, well, 40, I guess 40-45 will be enough here. So that's a potential pivot zone. When the price comes closer to the bottom of the zone, so you may go to the smaller time frame, like 5-minute chart, for example, and try to capture a reversal from here. So I don't see any more interesting trade locations here. So, for example, entering now probably doesn't make sense, because it would be the momentum trade, and if it would be the momentum trade, the odds are so that with 70% probability it will be whipsawed, so you'll probably be stopped out here. So the rule of thumb in such markets, even if it's bullish, so to wait until the meltdown, wait until the price tests the area below, captures the reversal, so finds the reversal, shows you the move to the opposite direction, and then would be your opportunity to enter the swing. But I don't think that would make a lot of sense to enter the position here. By the way, guys, put here any instruments that you follow, by the way. What's exactly on your watch list today? Okay, so we have some questions. Thabo is asking, if you had $1,000, how much would you risk per day? Well, that depends on my loss limit. What do I mean by that? So that depends is whether this $1,000 is the amount of money which I absolutely can lose, or do I need to keep some of it? In other words, what's my loss limit? Is it $200, $300, or it's $1,000? If it's 1,000, so I will divide it by 20, so I would take 5% of this loss limit, and that would be my risk. So in that case, that's gonna be $50, right? If my loss limit is smaller, for example, I can afford to lose no more than a half, which is $500. So again, I divide it by 20, and I get my risk for the trade, which is $25 in this case. So that's how much I would risk. Well, so if you're speaking of the volume, so that's a different thing. because volume depends on the size of the stop loss which you take. For example, if you're a day trader or a scalper, your stops are pretty small, so you can risk more, you can take more volume. But if you're a swing trader, if your stops are reasonable, which I advise to do, because small stops are easier to capture. So for beginner traders especially, so you need to place more distance stops to avoid being caught by the market noise or by the volatility. So maybe 30-minute chart, 1-hour chart, use volatility and place your stop losses accordingly. Maybe, for example, for pound yen, it might be like, I don't know, 25, 30 pips, no less, no smaller than that. Okay, so Theresa puts buy instrument for the today Bitcoin, ETH, Euro Yen, USD, JPY. All right, so let's go, by the way, to these assets and let's try to figure out if we can capture anything out of them. All right, USD JPY is just a perfectly range-bound market, so it's very difficult. It's incredibly difficult to trade it. Well, maybe for day traders that's okay. So if you switch to lower time frames like 1-hour chart, 30-minute chart, and even 5-minute chart, you can still capture something out of here. But the directional bias, identifying the direction, is incredibly difficult here because you see that it's moving totally sideways. So in order to prepare for the trading day, you need to have some kind of idea of the direction, and the idea is very difficult to build here because it's moving totally sideways here. Euro Yen might be better a little bit, but also that's pretty sideways market. But it's a trending to some extent. So between these three, I would certainly select pound yen because pound yen is more trending here. Okay, so gold, everybody trades gold, we know that. So Bitcoin is another interesting instrument, I think, for this week, and I will explain you why. All right, now let's switch to that. So first of all, it's bottoming, it's dipping. So remember, buy the dip, right? Not the rally. So you got to be searching for an opportunity to buy the dip, not to buy the peak. So that's number one thing. And another thing, so for example, if you switch to, if you see the spread between Bitcoin and ETH was heavily trending for the, I don't know, for maybe 2 months in a row. So you see that Bitcoin here was underperforming substantially, and here the situation starts rotating back. So Bitcoin is back. ETH is probably a point for profit taking. Just take a look here. ETH is peaking, it looks substantially stronger, but the rotation back to Bitcoin is probably the next trend that we will see in the near future. Because yeah, I think this rally for ETH might be over. It had achieved it's not the all-time high, by the way. It's close to the all-time high, but it's not the all-time high. So it was the annual high, with the market renewing the peak from March 18th or 15th, so you name it. So that's the middle of March. All right, so that is the rally, but it had not established the all-time high compared to Bitcoin, by the way, which had done that perfectly not so long ago. So every time it renews the all-time high. Even the momentum is not very strong, but the trending structure is substantially stronger here for Bitcoin. For example, several days ago, August 14th, it has established the perfect high, the new all-time high, which was 124,000. The previous one was July 14th, 2025, 123,000. So it's moving steady, maybe slow, but steady to the upside in comparison to ETH, which had just liquidated the previous losses. So that's why Bitcoin would be probably my choice if I would focus on crypto. So it's not overheated. I mean that the market value versus realized value here is probably reasonable. So it's not very overheated yet. So the supply is in profit. The most of the supply is in profit, speaking of on-chain analytical perspective, but it's not in the euphoria zone yet, I would say. So achieving 130,000, for example, is absolutely possible. I don't know about the near future. Nobody knows anything about timing. Maybe it will go sideways before that, but if you would maybe capture the bottom for Bitcoin, so it would be much more reasonable than going to ETH. I think so. So that would be the area which we probably would construct the long position here. All right. All right, so that might be our choice of entering the position here. All right, US 30. So Joyce is focusing on US 30. Me too. So I'm focusing on the same, on the Dow Jones. Gold. Well, gold is losing volatility, as you know, and losing volume, but we still keep gold on the back of our mind because because it's trending, right? When you have a trend, so every moment in time you may spot the beginning of the trend, right? Even though it's consolidating heavily, but the beginning of the trend may start at any minute. So the only question here is that it's incredibly difficult to predict the timing, so the moment when the trend resumes. So that is incredibly difficult. So for US 30, for example, we are already on the move. So for Dow Jones, we are already on the move, so it's nothing to predict here. So maybe, I don't know, there is there is opportunity that the trend had stopped here, but we don't know that yet. So probably it's still on. So we still have opportunity to ride another wave up. And I don't think it will give any surprises here. At least we're already in the trend. For gold, we are not in the trend yet. It's a long-term trend, but short-term dynamics is still down. All right, GBP USD. All right, it's the same like everything against USD. It's the same dull market right now. End of summer. Low volume, extremely low volume. So GBP might be a little bit stronger than anything else. British pound moves slightly better than anything else. But apart from, for example, euro, so it will maybe look stronger than the euro. but I would probably now, as I've said, I might be very cautious with this market. I might be very careful with this market. But still it stands pretty nicely here. It's the price standing in the combination between 50 and 20-day moving average. Here it is. You see that at any time it may find support here. So if we, for example, have this day closing higher, so tomorrow, for example, we might think of getting into this position. But of course, there are no guarantees here because American dollar is still kind of supported right now, so it's not under pressure. It is actually supported. So yeah, that's my take on GBP USD. Pound yen might be a little bit stronger, but for pound yen you need to find the better trade location here. Here it is, by the way, for pound yen. So your trade location might be below, but the aggressiveness of this move might be substantially greater, maybe. All right. So what else do we have? So as I've said, Bitcoin might be here. Gold is consolidating, but we're waiting for it to maybe come out of this channel. So again, it's not moving yet, so it's still in the downswing yet. So because if you see the market structure, it is still the downswing. We are expecting it to reverse maybe, but it's in a downswing, so it's not yet in an upswing. So we are not there yet. So it's still the downswing. So be careful about that. I don't go all in on gold. Be careful spotting it. So the all-in, it might not be justifiable here because, when it's in a downswing, it's in a downswing, so it might continue, and all upside breakouts might be actually false here. So that's the take on gold. What else might be interesting? Let's watch crude oil, by the way. So because of this geopolitical stuff and situation, so it might be pretty interesting. So crude oil, by the way, moves also in the perfect downswing. And it exactly displays the inability to break the ceiling. So now it's might be reversing to the downswing again. Just take a look at how exactly it forms the previous intermediate term lows and highs. Now maybe another pivot moment or the pivot point might be again to the downside. But let's watch the news, because it very much depends on the news of those negotiations which are going on right now. But I think that there will be no surprises here, and it will hit 60. So it will hit 60, and it consolidates perfectly inside of the trading range. You see, that's a perfect triangle here. Well, probably the best trade location would be to wait until the price maybe elongates a little bit, maybe breaks to the upside, then reverses, and then it hits 60. So I think that's one of the examples of pretty good downtrend, of pretty nice downtrend, which we can actually follow. So yeah, that's one of the opportunities, by the way, here. So if we go to EIA.gov, which is the Energy Administration of the United States, so let's quickly do that, and go to STO forecast, short-term energy outlook. Here it is, you see, U.S. Energy Administration of the United States. I want you to I want to draw your attention to the STO forecast, diving deeper. So they diminished their forecast down to 60. Previously it was down to 50, sorry. It was 60 at the end of the year. Now it's 50 at the end of the year. So growing demand, growing supply, sorry, and the overall decision of OPEC Plus members to accelerate the pace of production, which was actually announced not so long ago, it pressures the crude oil. So for natural gas, the situation is different. So it's expected to stay at the $5 per British metric unit at the end of the year, and next year it's expected to maybe go to $6. But for now, crude oil is under more pressure. At the end of the 2025 is under more pressure. So OPEC Plus members, they voted for production increases. So oil inventory globally will average more than 2 million barrels per day in the Q4 2025. So that's pretty much a lot. So that's more than it was before. So with that, I don't know what should happen with crude oil to drive it higher currently. So 60 or diving it below 60 would be absolutely logical scenario here. The only thing that you would need to do is to find a good technical trade location to get into the short position here. So that is not easy, because market is rotational, it's going sideways. So be patient here. Don't try to capture another dip when it dips. So you are not supposed to sell the dip. So what you're supposed to do here is maybe to wait for the market to come to the next resistance, to try to break, to spot if this breakout is failing, and then to enter the position to the opposite direction. That's, I think, might be the potential opportunity for crude oil. What about natural gas, by the way? I don't know if anyone actually trades it here, because it's actually pretty choppy. So it's not that smooth in comparison to other assets and gold and all. So you see that there are gaps here, and it doesn't suit day traders probably. But for natural gas, by the way, so I think the situation might be more interesting in terms of swing trading long position, because it's standing at the support of 2.9. So with the STO forecast pointing to $4 by the end of this year. So probably it won't go down substantially deeper than we have it now. So if you have the guts, if you can place it far enough stop loss here, so you can absolutely think of buying natural gas. So there won't be huge, the payout won't be huge here, so maybe 3 times to your risk. And you should wait, I don't know, maybe for a couple of weeks, maybe 3 weeks, or even 1 month. So that's a position trade, that's not a day trade. I don't know how many of you guys are actually position traders here, but that's one of the opportunities which might be actually pretty interesting. All right, so what else do we have here? So let's go to some cross pairs. If we do not trade, for example, yen or American dollar, maybe we'll find anything on pound versus euro, or euro versus pound, or anything like that. So let's try to figure out, or euro versus franc, because Swiss franc is actually basically we have the zero interest rate, so maybe we can short it. So let's try to figure it out. Euro pound is standing right above the previously good 2 standard deviations level. So I don't think that's a good location for buying. So we might maybe wait at least to maybe several days before it reaches another bottom. So then we might be able to buy it actually. So what about euro franc? So let's quickly go here. Euro franc is also, I think, not very good opportunity, because it's also positioned right in the middle between the support and the 2 standard deviations level, which might be considered as a selling point. So we don't yet have it. I'm in the good trade location here, and also that's a consolidation. That's another consolidation, which I don't think it makes sense to play in any positions here. All right, what else do we have? So let's see, by the way, what else do we might have here in terms of indices? Let's watch DAX. So is it a good opportunity or not? DAX is actually moving as along with the US 30 Dow Jones, and it was moving up. So the upper resistance level is not achieved here. So DAX might have some support. Because of the decline of the American dollar, it might have some support. So I don't think it's a huge opportunity, but that's another thing. That's another potential entry, along with Dow Jones. The same thing, by the way. I think that's pretty much a mirror situation with the Dow Jones. So we might consider that too. I think it's a little bit weaker than Dow Jones, but DAX might still be, or still represent another opportunity, because you never know exactly which index will break, so you might try both. For example, if it breaks here, you might get into the long position. It might be more aggressive than Dow Jones in some circumstances. We don't know that yet, so maybe European news will come out more positively than expected. I don't know. So, but that's another opportunity which we might actually spot. Okay, so what about, for example, other indices such as for example, Nikkei. Nikkei is, by the way, in the peak, the Japanese index, with the diminishing yen, with the decline of the yen. It looks pretty momentum based. So that's momentum is pretty strong here. So I won't be surprised if it actually breaks in the near future. It's not maybe so easy to spot the good trade location here, because you see that it also moves down. It liquidates some area stop losses below. Well, not stop losses, don't get me wrong. It liquidates just some of the liquidity below. But if it consolidates, it might actually break. So because the momentum of Nikkei is substantially stronger than the same of DAX, for example, and even it might be even stronger than Dow Jones. However, Dow Jones might be slightly, more logical right now. But Nikkei is one of the things, or one of the instruments which might be potentially interesting here. Alright, guys, we got some time still here to answer your questions, so feel free to drop your questions here. Give me just 1 sec. I will be back in 1 second. All right, so yeah, thank you very much for joining today's streaming session. So see you next Tuesday. By the way, we got a question actually. Sorry, I didn't understand your answer to question 3 about gold. Question 3 about gold. So let's quickly get back to this question. So are you referring to the contract size? contract size, you mean? Or we got some, do you consider indicator to be working? I don't think that's about gold, right? We will get back to this in a minute. We just had general questions about gold, not specific questions. What do you think about gold? So I shared this view several times, so hopefully that was helpful. Okay, about indicator. What's indicator do you consider to be working? So indicator is just a way to organize the data. That's not a model yet. That's not a trading model. That's not a trading strategy. So that depends on what exactly you want to do. If you want to spot the trend, for example, so you should probably use moving averages. If you want to measure volatility, you want to use average true range. If you want to place a stop or place a profit target, you want to use average true range. If you want to spot the borders of the trading range, you might use Bollinger Bands. It might be helpful in this case. And well, that depends. That totally depends on what exactly do you want to achieve with the help of indicators. Yeah, all right. Thank you, guys. So see you next Tuesday. So it was a pleasure to broadcast for you today.